Hello, everybody. C. Ray Brower here with Your Perfect Home. And today I've got John Lone King back, and we're going to come back and find out what's going on in the market today, right after this. And we are back. How's it going, John?
Amazing. How are you, C-Ray?
It's been a fantastic day. Been running around doing a little bit of stuff down here in Southeast Kansas, and just enjoying the whole experience down here. It's been a great time. We're buttoned up on the new construction and dry and insulation going in. We should be complete next week.
Woohoo! Woohoo! So,
Ooh.
how's Dorothy and Toto?
Dorothy and Toto, we've kept them away just a little bit, although, I was thinking I might like to go see the wizard.
Absolutely. Well, I hear there's some weather moving through there, so depends on how good you secured that foundation. You may just be flying away to Oz.
And how about you? What's been going on back there in California?
You know what? It is. I could probably come up with some cool, crazy way of saying it, but I have been busier in the last week than I have been in the last year, and it's a good feeling again. So business is picking up, and I'll share some of that with you. But I got to tell you, I don't know, idle hands, right? It's not being as busy. There's feelings of unproductivity and that kind of thing. And so just being back in the thick of action and busyness and that kind of thing, it feels good. So I'm loving it. Thank you for asking.
There you go. Or productiveness, not maybe busyness, productiveness. There we go.
I agree.
Right on. So what's been happening with all this craziness going on with banks closing and wow.
And it's funny because I think that, first of all, it's good news. It's good news and I'm a bit demented. We've been going on probably close to 6 months of these. So hopefully you're getting a feel for me, C-Ray, that, I have a weird way of thinking. I walked in on Monday morning and I said to Jen on my team, I said, "Hey, Jen, what have I told you about war?" And she goes, "War is good for interest rates." And I'm like, "Yep. How about bank failures?" She goes, "I don't know. They're good for interest rates too." So
exactly. Really, always positive. You and me. That's what I like about working with you.
Beautiful. It's true though, and it's really the markets are very fickle, and the markets react to information. The good news is predictably, they follow patterns. The bad news is that you have lots of things that come up nobody expected, and this is one of them.
Right.
And where it really comes from is an old adage that says the Federal Reserve will raise interest rates until something breaks. Well, guess what? They broke the banking system. Yep. So therefore, most of the market now believes the Fed is done raising interest rates. Now, is that really true? Are they literally done? I don't know. But I remember a couple of times you and I have talked about this over the last few episodes about the Fed's really just trying to talk strong to stop us from thinking that we're out of the woods and that inflation is handled. Right. Because deep down, I think they agree with what I think, which is inflation is going to be just fine. We're in good shape. We've solved the problem by raising interest rates quickly, but they can't tell us the problem's solved because then we'll act like there was never a problem in the first place. But right. Now we have external evidence that there's a problem, which is the banking failure. And I'll explain in a minute what I think really happened there. But it actually takes the pressure off the Fed. It's kind of like, I don't know, maybe this is a bad analogy. It's my first time trying it out, so humor me. It's kind of like the parents that keep telling the kid, "Hey, I'm going to take this away from you. If you don't be good," and sooner or later the kid realizes it was never taken away. Well, some smart parents pick up the phone and call the local police officer and say, "Hey, could you come over here and scare my kid and make them think that you're going to take him to jail?" Well, that's an external influence.
Yep.
That's somebody that they're going to listen to and say, hey, mom and dad, I know you were telling me to be good. I should have listened, and I'm going to listen now.
Right.
And I think that's a little bit of what the Fed can now say, okay, good. Now we don't have to talk as tough because there's a different sheriff in town that's telling everybody, hey, you can't relax. You can't pretend nothing's wrong because there's something wrong. And now the Fed can back off a little bit on their rhetoric and back off on their, we'll see what happens next week, the week after, when the Fed meets. I think it's next week. We'll see where they come in and what they say, but it's clear that the markets have changed their expectation and they don't expect the Fed to raise rates, and mortgages are responding favorably. So that's good news.
That's good news. Absolutely. Absolutely.
Yeah. I got a lot of people who ask me, John, is this banking thing going to be a problem? Do I need to worry about my money at Wells Fargo and these other large banks? And I probably shouldn't have named a bank, but I'm not saying there's anything wrong. I have my money at Wells Fargo. Okay. So, but these banks were unique situations, and they had a very small number of people that deposited very large amounts per person. And so it only took a few people to say, I'm worried, and pull their money out. And right. The banks don't keep money in the bank waiting for you to pay, to want your cash. They put it to work. That's how they make money. And there's definitely been some flaws in regulation and oversight that are going to come to light. And I won't bore you with my thoughts on all of that stuff unless you want to get into it, C-Ray. But the fact of the matter is, the system in general is safe. There are still some banks out there that I think have similar characteristics to the two that have collapsed, and the government's going to need to step in and solve the problem, and they are, because this is something critical to the basic operation of our economy.
Right. Exactly. I look at it, and I'm not as well versed in it as you, but I look at it as the savings and loan back in the late 70s, early 80s.
Yeah.
Same kind of scenario as what I'm seeing. Of course, back then I wasn't involved at all in that sort of stuff. I was just a hard-headed labor construction worker, and it didn't really affect me at all. But I can remember the things that was being said then and what's going on now, and it, to me, is the same scenario.
Well, and it coincides with the last time that the Fed had this aggressive of an interest rate hike. It was the late 70s, early 80s, and Paul Volcker came in and he said, I'm going to raise rates. I don't care what breaks. I'm raising rates to stop inflation. Right. And the Jerome Powell has basically taken that same approach and said, I don't care what breaks. I'm going to raise rates to stop inflation. But inflation now wasn't the same as inflation was in the 70s. And I think anybody can fault him, but nobody can predict how something is going to play out because it's a new and different set of circumstances. But you're right. The savings and loan crisis really came at the exact same time as we had super high inflation, and the Federal Reserve decided to, hey, I'm going to do whatever I have to do to stop this, and things are going to break. Part of what they broke was the savings and loan industry.
Right.
So, C-Ray, I want to talk about something exciting. Can we talk about something exciting?
I always like exciting. You know me.
So I know. I'd like to believe that this isn't true, but I know I'm not the only lender you bring onto your show. So, has your audience learned about the new California Dream for All program that the state of California announced a week and a half ago?
There has been some talk about it, but I always like to hear, and I'm sure the audience likes to hear, other points of view. So, and I know you are a very, let's see, what's a poignant guest that has
a good thing, C-Ray?
But yes, it is.
Okay. All right.
Has lots of good information and a great way to present it. That's what I like about you. It's always positive, it's always good, and it's always exciting. So let's hear it.
Love it. So I have been in the mortgage industry for 23 years. And I'm not exaggerating when I say this is the best first-time home buyer assistance program I have ever seen in my career. And I'm not kidding.
Yeah.
Now, there's no such thing as a free lunch. There's no such thing as free money. But this program is the right idea at the right time, done the right way. What I'll tell you is there's two major negatives to the program. And they're probably not what you think people have said or will say. My only two concerns is one, how you would handle refinancing in the future as rates go down. And then number two is who pays the fees for the cost of selling the home. Those are the two things that I think are challenges, or things that you need to be aware of. And I hope you respect that I'm starting with the negative, because I'd love to talk everybody out of using this, because if you think these two things aren't so negative, everything else is positive. Okay.
Well, and that is always the best way to do it, is to make sure that everybody understands the whole thing, not just this good stuff.
Absolutely.
Because there's lots of good stuff in everything, but there's always the other side of it that can create a problem. And it's always best to get it all on the table. And the good news. What do you want to hear first? The good news or the bad news?
Right.
Hit me with the bad news, because from there it's uphill.
Yes. So for anybody that's seen or heard any of the details about this program, you're going to say, well, John, you're missing the biggest negative, which is you have to share your appreciation with the state of California. That's not a negative. I'll explain in a minute why it's not a negative, but that is not a negative. The negative is, and I'm operating on a bit of rumor, a bit of factual insider information, and a bit of all of this is subject to change when the real rules come out on March 27th. Okay, so everything I'm about to say has that as a pretext. That's my legal disclaimer. Okay.
Right.
The interest rates are high and they're going to come down. How far down? We don't know. How quickly are they going to come down? We don't know. I can guess. I can throw a dart. I can do all of those things. But I feel confident that interest rates will be lower in the future than where they are today. So the problem is these shared appreciation programs, any down payment assistance program, says when you refinance, you have to pay back what you got in assistance. Well, that means if you get a 6.5% interest rate today, and a year from now rates are at 4.5%, you have to pay back that money, and the state's giving you a big chunk of money, which means it's really going to eat into, well, gosh, can I really afford to refinance because my payment isn't going to go down because I'm borrowing extra money? Well, here's my rumored factual insider information that is subject to change on March 27th. The program's going to allow you to refinance one time without pulling any cash out, because provided you're not pulling any cash out, without having to repay the state. So nice. You will be able to lower your interest rate once. The problem is, do you do it when it hits 5? Because what if it's going to fall to 4 next week? Do you wait? Like, that is going to be the biggest stress, because you have one shot. And you could wait forever. I'm waiting for it to get down to 3. And it never gets to 3, and you miss the opportunity to refinance at 4.5. So that's a negative. Now, the positive is you get to refinance once.
Right.
But the negative is it's going to be super stressful. Man, I locked in at 6.5 and rates are at 5.5. Should I refinance now? And I will give my advice at the time. I have some thoughts about when I think the market, where I think the market is gonna hit as far as levels of it, where interest rates kind of hit a certain point and they stay at that level. And when they move, they kind of move to the next point and they kind of stay at that level. And there's historical basis to this. And so I think that's part of the conversation is, hey, what's the next level that we think it could fall to? And is it worth it waiting? Is it worth it for you to wait? Okay. That's going to be a big point of stress for people. And Murphy's Law says the minute you pull the trigger and you do your refinance, the next month rates are going to fall. So that's going to add stress, while being a huge positive component of this program is They're going to let you do a refinance to take advantage as rates come down. Okay. The second negative, by the way, any questions about that, C. Ray?
Yeah. I think you covered it well. Basically, to put it in a quick little nutshell, if you're going to refinance, you know that it may drop down, but it's crapshoot. Whether it's going to drop the day after you decide to refinance again. Yeah. Everything in life is a crapshoot, and you got to weigh the positives and the negatives and go with your gut and move forward with the way you think is the best.
Exactly correct. So now I'll tell you the second negative.
Okay.
Is who pays the cost of selling the home? So the premise of the system, the premise of this loan is you can buy a $500,000 home today, and the state gives you $100,000, and you only have to make payments on $400,000.
Right.
Now the state gets 20% of the appreciation, and everybody, some people are saying that's a lot of money. Well, here's the deal. You're only making payments on a $400,000 home. So if a $400,000 home went up by 10%, you'd make $40,000. If a $500,000 home went up by 10%, you'd make $50,000. Well, guess what? You still get your equivalent portion of the appreciation. You just got to live in a $500,000 home, although you were making payments on a $400,000 home. It is no different than, see, Ray, if you and I decided we wanted to buy a house together and we went 50-50. Now, maybe we split the house payment in half. Maybe I come in with cash and you make a house payment on your half. The truth is we still paid for half the house. Would you agree?
Right.
So when we sell the house, who deserves the appreciation?
Mm-hmm. Yeah.
You get half and I get half. Neither one of us deserves a greater portion.
Right. Exactly.
It's the same thing with this program. And people have it in their head they're losing money. The money you lose is the fact that you would have had to pay interest on that extra $100,000, and you would have had to write a bigger check for a bigger mortgage payment during that time. You never wrote that check. You're not paying any mortgage insurance you would have had to pay. So that isn't a negative. Here's the negative. Let's pretend that you buy that $500,000 home and it goes up to $600,000. So you pay the state back their $100,000 that you borrowed, and you pay them back the $20,000, which is 20% of the $100,000 it went up.
Mm-hmm.
The state doesn't pay attention or care that you really didn't make $100,000 because you have to pay fees to sell the home. So realistically, you sell a house for $600,000, you're paying fees on that. You're not getting the full $600,000.
Right.
The state gets their 20% off the top. Then the fees are paid. So you only paid interest on your $400,000, but you're paying the cost of selling on the full price of the home. It's just a cost of the program. I think it's the only way the state can do it to keep it simple, because then you're going to have shenanigans with, well, how much is the costs? And what if there's a seller credit? They have to, if there's repairs that have to get done, does the state participate in that because they're covering part of the cost of sale? It's impossible for it to be done any other way.
Right.
But it is a negative because the full amount of the cost of selling comes out of your 80%. They get their 20% off the top. Right.
I hadn't thought of that side of it.
Yep.
I hadn't thought of that side of it, but it makes complete sense. You are paying a little extra,
mm-hmm.
but I don't know. I'd have to sit down with a calculator for a little bit because the mortgage interest, the interest, or your lower interest, the payment being lower, and not having to pay mortgage insurance over the cost. I don't know that you aren't really actually still coming out ahead.
You might not. You might still be coming out ahead. You might not be. But here's the fact, and this is really the positive of this. And you and I have talked about this multiple times over the last 6 months that we've been doing these podcasts.
Yeah.
And that is, there are so many people who are not buying right now for one of two reasons. And it all has to do with affordability.
Yep.
Either they don't qualify for the house they want, which is, hey, I qualify for a $400,000 home, but there's no homes in the neighborhood I want in the condition and size that I want for $400,000.
Right.
Or they qualify, but they're unwilling to spend that much. John, I can't see myself spending that much money for a $500,000 home. I just don't see, I'm not willing to spend that much money. So either now there's a third category, people who can afford it and are willing to pay it, and they're currently shopping for a home. Right. So that segment is already, those are the people shopping for homes right now. And there's very few of them, which is because interest rates are up.
Right.
But those other two segments, they'd love to get a home now, because as soon as interest rates come down, the competition goes up and prices go up. And this gives those two segments a shot. Because if you only qualified for $300,000, but you need a more expensive home, this program raises your qualification between 20 and 25% over what you were qualified for. So you'd qualify with the same monthly payment as your $300,000 with a small down payment. You'd be able to buy a $360,000 to $375,000 home for the same payment per month.
Right.
That's a game changer for somebody's ability to have home ownership that, as we go forward, will get less expensive as interest rates fall.
Yeah.
So it gets their foot in the door on something that gives them the stability that they need to raise their family and build generational wealth.
Exactly. I mean, everything that I've heard about the program has been positive. You've brought up a couple negatives, and I do appreciate that, because, like I said, everybody needs to know the whole story, whole story. Not just the peaches and cream, sunshine and roses.
Yes.
Because there's always the dark side of everything that goes on. Period.
Yeah.
So,
yes. C-Ray, can I make a shameless plug here?
What's that?
Can I plug myself and my I have a webinar coming up next week, educating people about this program. You mind if I talk about it?
No, not at all.
So every Monday night for the next 2 Mondays at 7 p.m., I'm hosting a webinar to explain exactly how the program works. And last week I had 85 people register. 45 showed up, and an hour later, 8 o'clock, as I was finishing the Q&A, I still had 43 people watching. I impressed myself.
That is amazing. Yeah.
Like, it was really good questions, really good information, if I do say so myself. And I'm doing it 2 more times. So if somebody is interested, and I'm going to, instead of having to type it out. Actually, I guess I'm going to just simply tell you, you can email me. My email address is, you can call me, or my email address is going along the bottom. That's probably the simplest way to do it, instead of me trying to tell you how to get on the Zoom call. Just call us or email me. And it's Monday the 20th at 7 p.m. or Monday the 27th at 7 p.m. And it's an hour-long informational seminar that I cover everything from start to finish, the pros, the cons, the good, the bad, how everything works. And again, I've got a lot of, I feel very confident in the information that I'm providing. So I will say that I feel that I'm not somebody who's going to throw out information and hope I'm right. So the details that I've got, I feel the sources I got them from are very, very reliable. Although everything that I've read that I wasn't supposed to have read says right on the bottom, subject to change when the full details come out on March 27th.
Sure. I love it.
Beautiful.
So, any big plans for you and the family?
You know what? Today is my son's 14th birthday.
Oh, wow.
So
happy birthday to your son.
Thank you. So I'm 6'4", and my son at 14 years old is, depending upon who we stand him up against, is somewhere between 6 foot and 6'1". And this morning I got to tell you, I'm an iPhone user, and Apple just does it right. In their Photos app, you can find a person and it'll create a video with pictures, collage of you and that person. And I was bawling this morning watching the video that Apple created for me of pictures of my son and I over the years. It is amazing.
Right on. Right on. So big birthday party tonight.
Birthday dinner tonight, and then Saturday's the birthday party. So taking him and his friends to Top Golf.
Can't make it to either one of them. I'm in Kansas. Darn.
And we actually sent your invitation to your home address, and we never got the RSVP. So I figured that was probably why.
That's probably it right there.
How about you, C-Ray? What are you doing this weekend?
This weekend, just kind of keep them moving through this process of getting this house finished up. Saturdays we usually work. Sundays we kind of take off a little bit. Got invited to a local cigar shop tonight. They have BYOB, and tonight's poker night. So I may end up playing a little poker tonight. Hope my wife's not watching. I'll be in trouble.
Love it.
Yeah, but getting on the plane on the 22nd, I'll be home, and hopefully the last video taken here is with it complete and ready for sale. So
love it. Well, I'm looking forward to having you back in California. It hasn't been the same without you.
Hey, I appreciate it. Everybody, John Lone King, if you need any information, don't forget his webinars coming up. The 7:30 Friday?
Nope. 7 p.m. Monday the 20th and 7 p.m. Monday the 27th.
Monday.
Email right down below or call me and we'll get you registered.
Hey, and he always has great information, and I plan on at least being to one of those. John, thank you as always for stopping in. Everybody go out and be the sunshine in somebody's rainy day, and I do have a rainy day outside here right now. You all be good. Thank you so much. Remember, C-Ray to find your perfect home, and if you have any questions that you need me to answer, you know how to get hold of me. Everybody, thank you again, and John, I always appreciate you.